I didn't start with like a silver spoon in my mouth when it comes to the trading world. Sort of yes, because I started in the late 90s where it took absolutely no skill whatsoever to make money, but since then I had to learn the hard way just like everyone else. All right. Thanks, BT. All right. Well, that's the whole point of it, isn't it, Rich? By identifying, just take the reversal. We're good? Hit me when I'm live. Good on Facebook? All right. We're good on Facebook. Ladies and gentlemen, 10 things that separate winning traders from losing traders. If I could teach you just one of these things, your time will have been well spent. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. So many great things to talk to you about today. By watching this video, you are agreeing told me, Mark Melnick, and T3 Live, harmless and not responsible for anything. Kindly go back, pause that slide, read it all, agree to it, and then move on. Thank you for agreeing to that. Let's just go ahead and talk about something today. We're going to talk about 10 things that separate a winning trader from a losing trader. And it's more on the psychology side, And so many people have come to me. If you didn't watch my last video, I highly suggest you do. It's Newsbeat Show number 462, and it all started where somebody who came in as a quadriplegic into our trading family, and he's reaching out to me, asking me, for help, certain things that he does, how he sets up, and what I could do to help him on his journey. Let's just freely admit it right now. Trading, I feel, is one of the most rewarding jobs ever on the planet to accomplish, and is one of the most painful jobs on the planet ever when you don't accomplish it. Trading is not a job that pays you to sit on your butt and collect a paycheck. You don't go exactly into work every day tired, half awake. You were drunk last night, partying till 3 o'clock in the morning. You woke up with a hangover. Oh, you're just going to walk by, say hi to your fellow coworkers, sit at your cubicle, and just sit there and take, I don't know, some antacids or whatever people do when they have a hangover um, these days. But molybdenum is really good for hangovers. Anyway, that's not the point of this. It's about the psychology of trading and things that you could do better. So the whole point of this show is to make you a better trader and help you make more money. If I have not accomplished that over my 500 almost, video, I've done over 500 videos, even though this is Newsbeat Show officially number 463, then I haven't accomplished my job for you. And trading to me is the greatest personal endeavor that a person could take in their entire life. I say this because how difficult it could be at times and how all consuming it could be as well. I mean, you have the big losing trade, and and you're just almost huddled up in a fetal position in your bed, and you don't want to wake up in the morning. You don't want to look at your account, and you're so painful, and it's depression, and it brings up, for some people, um, admittedly, myself being one of those people, many years ago, it brings up really dark, toxic thoughts. Let's put it that way. I've seen everything from suicide to wanting to hurt other people to thinking to losing belief in religious beliefs, to anything you can imagine. I have seen over my 20-year career as a active intraday trader and 12-year career as a active trading broadcaster. I say this because it's one of the last professions that who you are and what you think of yourself is literally reflected back at you based on your equity curve. It's actually kind of funny. And I wanted to walk you through the various aspects of trading psychology and how a winning attitude can literally lead to greater profits. And I know it sounds very cliche, and it goes a lot deeper than just staying positive. I don't believe on telling people to stay positive because that's BS. What do you mean stay tell the dude over there Tell the dude over there with three kids, a wife out of work, bills piling up with a $35,000 trading account with $50,000, $60,000 a year in bills. Tell that person that they just need to remain positive and everything will take care of itself. I don't believe in the BS psychology, but I do believe that in order to instill this optimism and confidence, it has to come through the form of at least making money, even at the smallest amounts, to at least have a foundation to build upon. And throughout this, I'm going to walk you through this and tell you how you can achieve greater profits through this. And I can, very honestly say that as I'm talking to you about this, that I am a phenomenally consistently profitable trader and will continue to be for as long as whatever great energies and whatever around me allows me to be. But the one thing that has taken me from losing in the market, losses in the market, even if I've made money every single year of my life as a trader, I still have had those bigger losses, many years ago, and I've gotten to the point where they don't exist anymore. And that is what I'm really trying to help you with. The one thing that has taken me from losing money in the market, like big losses, is realizing that whether I make money or not boils down to my attitude and blind belief in myself. And some of you believe that this blind belief, might come down to different things or whatever, but I will tell you right now that the best traders I've ever met in my life are not atheists. And I know atheists that are multimillionaires as well, but the best of the best of the best are not even very religious, but do believe in a greater power up there. So, for the sakes of this article, I'm not going to be pushing you. This is not Bible Studies 101. And the truth is, I could care less what religion you are, what you believe in, what you do not believe in. But just know throughout this whole article that having a blind belief in yourself or whatever that entails, even if you're just spiritual, being spiritual is very important as well, will help you a lot in the end. But let's get right to it. Number one, there's something what I like to call is analysis paralysis. And what happens is these traders start out soaking up all this information in the market. There's trend lines, there's this, there's these moving averages and they're crossing over each other and look what you got here, Mark. You got these Bollinger Bands and these trend lines and there's just so much. There's just so much. And this information will come in the form of stock picks that you have emailed to you, or books you've read, or seminars, or trading coaches, or gurus, or you name it. Your personal beliefs, background, and personality traits will then take that information, digest it into what I'd like to call, your entire foundation for trading. Next, you will take this newly, and this is, by the way, why 95 to 99% of people will fail even following the most successful guru. Bear with me, you know. And yeah, people on Wall Street, they don't like Mark Melnick talking about that because I'm supposed to exude some form of higher powered invincibility over here. But why don't we just be honest? Because I believe if we're just simply honest with people and straightforward with them, that I will have the best chance of helping you succeed. Again, if you gain one thing, if you learn one thing from watching this show, every single second you spent was worth it. And that is my goal today. If you're lucky enough, you're going to take this newly found information into the world of trading, and it could be an exciting and a bit scary, and it can cause anxiety, anxious, and the thrills. And if you're lucky, you're going to put on a few trades, things are going to go smoothly, and you're going to make money, and the money's just going to flow in. And if you're unlucky, you're going to quickly realize why over 95% of traders fail after the first few years. So, no matter how you start out, inevitably you're going to face a loss that's going to hit you in the gut. You know what I'm talking about. Everyone here can relate with it, unless you're brand new and you haven't traded. Maybe you can, and then this will still help you. This loss will resemble the first time, potentially, a girl or a boy broke your heart in school, or the disbelief you had when you heard at, school that, you know, back to the thing, I mean, that Santa didn't exist or whatever didn't exist after your parents has been helping you, for example, to draft your Christmas wish list and leaving out cookies for years on the fireplace. I mean, all honesty, I didn't have Santa growing up. I mean, I was in a public school. Yes, there was Santa Claus all around me, but my parents told me that the Tooth Fairy existed. And I will tell you, it really does damage to, I don't know, maybe I'm just a weird individual, and this is going to help you trade. Just, okay? Just bear with me here. So what happened was I was told that I'll put my tooth underneath my pillow. I lost a tooth. It was my baby teeth. See, I still have them. He, but like it was my baby tooth. As is that what they call them? Baby teeth, the ones that grow back after they fall out, the first tooth, whatever. You put it underneath your pillow, and the tooth fairy is going to come and give you money. So I was doing it and doing it. I started when I was 5. It came back to it's $1 under my pillow and a few quarters, and I was thrilled. A magical fairy flew down at night as I fell asleep in the ghetto of Brooklyn in which I grew up in. And a blessed fairy came, removed the tooth from underneath my pillow that fell out of my mouth, that was loose and fell out of my mouth, and literally replaced it with a US currency. It was amazing. It was a feeling that there was something good in the world beyond just the silly amount of quarters or dollar that I saw underneath my pillow. And when I actually realized I was doing it, and then all of a sudden I was 7, I was 8, I was 9, and I kept doing it and doing it. And then I realized one day that I did it. I think I was either 8 or 9, I don't recall, to be honest, one of those ages. There was no money under my pillow. I looked underneath and my tooth was there. And I'm sitting there looking at my own tooth, thinking to myself, what on earth happened? Where was the tooth fairy? Did the tooth fairy forget about me? That's what I thought. So I went to sleep again. I didn't tell my parents my tooth fell. I was in the back and there was no need. The tooth fairy had it covered. I don't need to bother my parents. And then the tooth fairy didn't come again. And I took the tooth and I brought it over to my parents and I said, the tooth fairy forgot about me. And they both looked at each other with a half ass grin on their face, excuse my language. And the type of thing. And I couldn't tell if they were just laughing at me because I was stupid enough to believe that the tooth fairy really existed, or that I looked so cute as an 8-year-old actually being upset that the tooth fairy didn't come. I couldn't discern between the two. And when I was told that there was no tooth fairy, I literally was angry at my parents because I thought they were all liars. Now, back to the loss. You're going to feel this sense of utter disparity. It's almost as if you were let down as the tooth fairy not existing, as your trading world unravels much quicker than the time you have spent building it up. And you have to get beyond the hard part. And this is the phase where most traders will spend their entire careers, ladies and gentlemen. And in any business analysis of a company's performance to drive further growth is paramount. Trading is not really different than that. The only problem is you have to decipher when it's time to tweak your model versus when results are just noise from the market. You take a loss. Does something have to change with your trading? Or was it just one of the common odds of the market? And this is the hardest thing for traders to do. See, what I've realized in the market spending all weekend is that there was an evolutionary shift in the market that just happened this weekend. You ask any trader that, they'll feel something different, but they won't be able to tell you what or why or how. So let me ask you a question. This week in trading, the last week that just passed, how many of you traders here felt like there was something different in the market that was weird, almost made you feel uncomfortable, like something changed? Type it in the comments section if you realize this week of trading that something changed. Maybe it didn't for you. Maybe you said, not me. How many of you Newsbeat Live members? They thought it was just you, big time Eddie? It's not just you. It's not just you. How many traders felt like something changed this week? Maybe you didn't. Maybe you didn't. And I don't mean whether you made or lost money, but that the market changed. For the better, for the worse, doesn't matter. It changed. It's different. Not good or bad, just different. And a lot of people, you, Eddie, Suzanne, you, Anna, you, Rich, okay? So my reaction to it was to discover something that we could do that has takes advantage of this change. And in the beginning, I actually had no idea what it was that actually changed. I actually had no idea. So I literally said, I'm going to spend all weekend here. I'm going to spend all weekend here and I'm going to try to literally figure out what changed. I literally wanted to figure out what changed. And if you actually watch this video, I combined it with the fact that we have a new member of the room again who, God bless him, and God blesses everything that he does, is a quadriplegic. And I literally did a new Newsbeat show, number 462, that literally talks about a simple, effective way to play earning strategy with a very slow way to make money. Like a very slow, easy way with very low risk to make money in the market. And these strategies I would never even look for had problems and situations haven't come to us. So think about it. You just spent hours, weeks, months researching the greatest system ever that random guru A shared with you. This system on all fronts looks like it'll give you an edge over the market. Probably if it's a guru, you're going to be stuck in the 4357 paradigm, which means you're going to inevitably be suffering psychological toxicity. But let's say you see a guru like me who says, my strategies work over 70% of the time. Sound like me, without me mimicking my own accent. In addition to this edge, it also provides you to 2-to-1 in terms of the size of your winners and losers, which is, I'm not claiming my strategies do. By all accounts, this would be considered a system worth testing in the real world. Of course, since the market is random and evolving, everybody here agrees that the market is changing and evolving. Why on earth are the strategies we're doing stagnant? Why is Mark Melnick's amazing strategy that he's made hundreds of thousands of dollars? I saw the record. It's amazing this smell. The market is evolving. Strategies have to change and evolve. You want to know what's true about just about every single active active black box strategy out there? You want to know what's true about all of them? They don't work forever. They have to constantly be tweaked. So if the market is random, and let's say out of your first 6 trades, only one works. You're batting 1 for 5. You're like the New York Knicks. You have 1 win and 5 losses, right? The seasoned trader will know that it's just a matter of placing a large enough sample set of trades for things to net out. The newbie trader or the toxic trader or the trader stuck in analysis paralysis will without a doubt change this system before it has time to bloom. And as I'm talking about it, it sounds so obvious that you have to allow time and opportunity to work in your favor. But when it's your hard-earned money on the line, your first reaction is to analyze and correct. It's such a normal human reaction to protect oneself, yet this type of behavior is what traps us and never allows us to reach our full potential. So the second thing you need to realize is I don't want you to accept that the market is random because that's a lie. And I know I have people out there who've been trading longer than me and say, oh my God, please tell me Mark Melnick did not just say that. Chill. I am going down the same line, except that the market is randomly changing. And understanding that the market is randomly changing, and that's the second thing we're going through, is probably the key way of becoming profitable. And I have done it all in terms of predicting the next action of the market. You see me predict it with the algo levels, all these different my moving averages and Bollinger Bands and blah 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 blah. And at times the market would adhere to this analysis, which would make me feel a sense of control. However, there were times when the market would pass through my key levels as if it didn't exist. And now that I've been doing this for 20 years, I now realize that my analysis does not exist anywhere else but in my head. The only reason the market would respond to my analysis is based on whether or not the other active robotic traders who really can influence the move of the stock I'm watching are on the same page of mine. And then, of course, I learned how to become on the same page, and that's how we accurately predict the market to this day. And another thing is review your equity curve. A lot of traders spend time analyzing their individual winners and losers and looking for some sort of insight that are going to help them crack the code. And maybe if I choose a different moving average or a different parameter, or if I cut my losses earlier and I let my winners ride, yeah, that's real easy to do. These are all helpful things when looking at one or two trades, but how would this impact your bottom line? Have you honestly maintained the same system long enough to even analyze how minor tweaks could help it? The answer for most traders is no. This is why when I released a new strategy again today with the paraplegic trader in mind, just to go and show you the strategy, I'm going to pull it up right now. That is why you notice that over here there's a different version. You notice that? You notice that there's a different version over there? Because I'm constantly adding minor tweaks to my strategy. That's why I can make millions consistently. Because I am not stubborn enough at this point in my career to look back at my prior wins and actually tell myself through prior wins that's it. That's the way to do it. You see, I used to think that way back in 99 and 2000 when I was hyper scalping and I made 1.1 million in my first year from 12,500 and I ruled the world in my head. I was fine. I was not ruled the world, but like I was king of my world rather in my head. And trading was always going to be the same. It was fractions. I would hyper scalp. I'd have 25, $40,000 days. I was consistent. I made money 99 days in a row and then lost on the 100th. That's another story for another time. It was great. Nothing was going to change. And then all of a sudden, decimalization came in. SOS left. SelectNet left. All of a sudden, Super Montage came in. Remember that nonsense? And then the market, of course, changed a bunch of times to where it is today. And I had to change with it. And one of the problems I had, the funny thing is after I made the $1 million my first year, my P&L dropped. Then it dropped to like 300 something thousand the next year. And then like 150,000. Then like, I think it was like 2003. So 99 to 2000 to 2001 to 2002 to 2000. Like the third to fourth year, I made like 37 grand from a trader who made a million, hundreds of thousands of dollars after to $37,000. Give or take, right? And the biggest issue I had was I was still living in the past. I was still trying the strategies which brought me to where I was today, thinking that nothing had to change. And that was the stupidest thing that I have ever done. And it is the same stupidest thing that traders are doing today. In fact, it's so toxic today that traders are actually sharing with you trading books and programs that made them so much money in the past. And there's all these cute little scams they do today, too. So they're literally, instead of moving on from where they were in the past to become a better trader today, they just market and they all of a sudden become trading educators. I'm an educator. I'm a talking head. I'm a guru. I'm selling you my best book ever. So instead of moving away and tweaking what changed, they double, triple, quadruple down in it and stuff it down your throat. You know, reviewing individual trades could be critical, but even more important is the review of your equity curve. And you want to know what most guru equity curves look like, or most trader equity curves? Successful, let's say successful trader equity curves. Uh-huh. Uh-huh. Just keep your eyes on the P&L. Oh, my head ended up at the end of the tunnel. Good, you made money. If you plot your equity curve, you're going to see the same patterns that you see in price charts. You want to know what my equity curve looks like? If you look at my equity curve for the past 5 years, you want to know exactly what my equity curve looks like? Like, I'll draw it out for you because I never thought it was this important until I realized that when I was losing money, my equity curve didn't look like this. And it is one of the most important things. My equity curve looks like this, like that. The problem is most strategies out there will give you equity curves that look like this. And then they'll say, "Oh, look, you made money. You ended there and you started over here. What a great trader." But what they don't mention to you is you just poisoned yourself over here. You just poisoned your brain. This is going to affect you at some point later in life, most likely later in your career. Can I get any of the veterans here who made millions of dollars early on and then had a very tough time replicating those results today? I mean, how many of you old school traders out there made money very early on? Old school is 2010 could be old school for you. You're making money a lot early on in your trading career, and then all of a sudden you just couldn't do it anymore? How many people? I went through that. This was like my entire journey to get to where I was today. And the problem is with these equity curves is even though, if these were two different, traders here, let's say this was trader number one in red and trader number two in green over here, the smooth equity curve is actually produces no to little psychological toxicity. While this is every psychologist's, fantasy of having somebody like you come in with an insurance card into their office. Tons of psych toxicity. Tons of psychological toxicity. So it's kind of cute because Charles Schwab offers an equity curve. That's what my equity curve looks like when you look at it. And I never knew how important that was. It's more important than the money. I would rather, and my word, and I'll say this and I'll say it again and again, I would rather have an equity curve that looks like this and make $1 million than have an equity curve that looks like that and make $5 million. I'll take that any day of the year, every day of the year. All right, your numbers are different. I'd rather make $100,000 with a smooth equity curve than $500,000 with the chop, 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 chop equity curve. Traders get so worried that you will somehow lose the money and you'll begin to trade so conservatively that you might actually slowly erode any gains that you had that will pull you back from wherever you are. I know that I'm losing my appetite for risk because when I back off my account highs, it's a slow process, right? This was like me 5 years ago. And this is only because after the pullback, I go back to trading loosely and with confidence. The difference between me now and 5 years ago is I can actually understand and see how the market changes. And then I ask myself, how does the market change? And more importantly, what is there anything new that I could do that's working now that I haven't noticed before? And I ask myself that question every single time the market changes. And that's how the last Newsbeat show, along with our with a brand new member of our room, came into fruition. The next thing I'll do is the one thing I realize is no more tips. When you order your pizza to your door, don't, order healthier food, please. But on your birthday, you ordered pizza. No more, you could tip then, but no more market tips. The one thing the internet provides is a plethora of market analysis and opinions. There are literally hundreds, thousands of sites that will tell you what the market is going to do next. You know, there was a time where I was subscribing to 10 different newsletters, and there was an Elliott wave expert, and another was a Richard Wyckoff method guru, and just reading this to you out loud makes me laugh because each method, while at times will tell you the same story, are so different in how they translate market information. On top of this, I was also a frequent reader of, I don't want to just put in the websites here, but I was reading all these different websites, and then when I really got desperate or bored, maybe I would go on stock twits, like the stock Twitter, and it was too much noise. And once I shut out all the noise, what I realized is when I started, and I did this actually with everything in my life 5 years ago. Like, if you're somebody who bothers me or annoys me, I will do everything I can to just say, I wish you the best in life. You're toxic for me. I gotta move on. Whether it's a family member, whether it's an ex. You know how many people keep like their ex-girlfriends and boyfriends and partners on their Facebook page, and they're constantly on their computer trading looking to see who their ex-girlfriend is hanging out with next? It is so unbelievably toxic that my trading just got better. Actually, it's kind of funny because between 2010 and 2015, I had sort of a choppy equity curve. It was like that, choppy like I showed you before. And as soon as I started, I literally removed, all my exes. I blocked out all their emails. I blocked them from all social media platforms. I blocked them from my phone. Nothing personal. And my equity curve just suddenly went like this afterwards because I was literally curing something that bothered me. Now, sometimes people aren't bothered by that. Maybe you're one of those people who watch, the television show Friends, and it's, about a small handful of guys and a small handful of girls, and they all take, you know, turns hooking up with each other, and they're all BFFs and they're all hanging out laughing having a drink. I'm sure that happens in life. In my reality, that never happens. Like I don't see that often enough in my life where I think like where I want to be friends with my exes. I don't wish a single bad thing upon anybody in this world, them very included. But I don't want to be friends with my exes. And you know what? I am the type of person maybe where I would be looking to see who they're hanging out with, or are they dating someone, or did they get remarried? And I'm telling you, I know I'm going down a path here, but I'm telling you, if that person is you, maybe you're a person who has a very thick skin and it doesn't bother you and you're fine. But for those traders who are affected by that, remove that from your life as best as you can. Some people you can't, you're forced to. Kids, whatever, something complicates a situation, get through it, but do as much as you truly can. Trust me. The next thing is you have to know when to take profits in different environments. And, please don't give me some nonsense about this or that as a key level. And we put a target at all the way up there at the recent highs. And yes, I have a million trades that work like that, and just as many that didn't. Unless you are intuitively trading for profits, which are probably less than 1% of the trading population, how exactly do you book profits? Again, this concept I might be talking about sounds simple enough, but when you factor in that most traders have an expectation of what the market will do next, it makes it almost an impossible task. For example, um, you know, you have the very famous, buy here, take profits here, get stopped out here. The problem with that is you will fall within the 43.57 paradigm. The only way to know when to take profits is to psychologically evaluate an OODA loop of the market in real time. And I know what you guys are saying. You're saying, what? Mark said OODA, OODA who? OODA what? And again, very, very, very shameless promotion of the Newsbeat Bandits course because it's a psychology course, more like one of a kind. I know it says 6 killer strategies. It should say change your trading life forever by analyzing the market in a real-time basis is what it should say there. And you have to be looking at the market, see what's happening. Is there news? Is the Fed talking? Is this, is this, is this, is this? And unless you're really processing all that together, the truth is, you're not qualified to set a take profit level or a stop loss level. And it's very easy for me to say, buy Apple at 200 bucks, set a target of 210 and set a stop of 195. And there will be a lot of times where you buy it at 200 and 210 does go, it gets to $210 before it gets to 195. And that will happen plenty of times. And I could show you all the bullish formations ever, but you will fall within the toxic 43.57 paradigm. And like, if you are part of the 95% plus, you will fail. So figure, I would say ultimately, be modest when you're learning something new. If you're learning a new strategy that promises that you make 3 times your money when you're right, or and you only lose one when you're wrong. You make 3x when right and 1x when wrong. I wouldn't approach it that way ever. I would say, let's say, let me see if I can make 25 cents and I'm throwing random numbers out at you. See if you can make 25 cents when you're right and 25 cents and lose 25 cents when you're wrong. You're going to realize that a lot of those strategies that are designed like that become nothing than clickbait, where look what this trader did so great, while ignoring the majority of the trades that the trader that, the guru, the talking head like myself did that weren't so great. Which brings me back to recognizing when you are wrong. Recognizing when you are wrong does not mean the stock deviated from how your analysis stated things. Remember, the market is changing randomly. Understanding when you are wrong is something you really need to define. For me, it's how much a position goes against me before I see a profit. That to me is recognizing when you are wrong. Once this happens, things will go one of two ways for me. First, the market will give me the mercy exit opportunity, and I will close the position with a minor loss or slight gain. Who could relate to this? Secondly, the market will continue in the opposite direction, and I will take a bath on the shares. And we're not talking with with the bubbles in the rubber ducky either. We're talking bloodbath. Please don't get caught up in specific rules that I'm sharing with you. Focus on the fact that you need to know when you are wrong. Accepting that you will not always get it right will save you all sorts of time and money, which is why I like to put traders in situations where they are usually right away. That is the importance of what I'm doing. And the new strategy that we just introduced to you tonight, you'll see me applying that strategy on every gapped up earnings name this week, if I can, if it makes sense to me. Think, I want you to think about the market in terms of averages. You'll have an X percent percentage of winners, which should be 70 or higher, and a Y percentages of losers, which should be 30% or lower. There really is no escaping that fact, depending on the strategy and methodology you're using. I'm the only trader on Wall Street that I have seen that focuses on percentages of being right more than the money. If you realize the trades I take are really never about the money. However, I am able to accomplish the money by focusing in on that. I could come up with crazy analogies and whatnot here, which I don't wish to get into so much, but I will tell you that show me a trader that always needs to be, show me a trader that always needs to make two or make three and lose one, to buy at 20, stop at 1975 and take profit at 2050, to make two and lose one or make three and lose one. And I guarantee you, I will show you a choppy and or negative equity curve. I have met over 50,000 traders. Yeah, you want to show me the one guy over there who's doing it right? I will show you the 30,000 people around him who are trying to do it right using the same system and are failing. The next line of nonsense is take every setup that fits your system. And once you see the chart setup go in the way that you want it, you have to take the setup. You have to take the setup. It fits your system. The problem is your system was not designed to handle the randomness of the market. I'll prove it to you. You see a nice, I don't know, some nonsense candlestick formation that somebody is touting out there, the XYZ candle formation. When you see X and then Y and Z, you notate it in. Does your strategy take into account if the Fed is talking that day? Does your strategy take into account that the US China trade war deal, the phase one of it, is supposed to be signed imminently? Does your strategy take into account what the market is doing at that second? Does your strategy take into account what the sectors around you are doing? You see the point I'm making. It's impossible to say, this is just my strategy and I'm taking it. That's why the OODA loop, in which we conjoined, again, OODA loop, psychological loop, teaches you how to observe, orient, decide, and act. OODA, OODA loop. It was created by John Boyd, considering one of the most brilliant American generals in U.S. history. I took his OODA loop and I took trading, and the Bandit course built a bridge. And not the Verrazano Bridge, which I think currently costs like, was it $1,250 to cross the Verrazano Bridge one way, and then it's free when you go the other way, I think. We built the bridge between those two things. There is no taking a setup that fits your system every time. The problem with that, psychologically speaking, is it's going to force you in trades. It's going to force you to take trades in which you would normally ignore because your setup is there, you have to take it, and you will most likely lose money. Another thing is the next step is recognize that the market is limitless. If you haven't read the Market Wizard books, please don't. It's a classic. Read it if you want. I don't care. But as you read these stories of successful traders, you'll notice that they have these enormous gains. And I'm talking, taking a few $1,000s into hundreds of millions of dollars. And in addition to the size of their gains, the consistency of their wins almost seem too good to be true. The reason their gains have no limits is that these traders really don't think in terms of yearly targets. That's why I don't have targets on my trading. And it works. It works well for not just me, but hundreds and hundreds and hundreds and hundreds and hundreds of Newsbeat live members. The next thing is trading psychology and self-reflection. Never be too proud that you are unwilling to point out your flaws. In fact, I think I make fun of myself so much on these episodes, whether I'm making fun of my face or I just mimicked my voice earlier, that some traders are actually thinking that I'm talking about them when I'm actually talking about myself. That's the hilarity, you know, of self-reflection. All these gurus out there, the way they talk, there's nothing wrong with them. I'll prove it to you. Tell me one guru in the industry that will constantly point out things that they should do different, things that they should change, and how they're actually growing. They don't. They come to you and they're like, I'm watching A, B, C, D, E, F, G. I did J, K, L, M, N, O, P. I even made, $100,000 trading QRSTUV. You're going to see throughout this entire video that I pointed out a number of examples where I called out flaws in my maybe, my old trading, my whatever. It's actually to me therapeutic. It also forces me to realize that my issues have very little to do with my system and more about mentally of how I approach the market. And if you approach the market from a negative perspective, you will lose money. The actual point of me making fun of myself and getting you to smile and maybe laugh at me, me being the pinpoint of your amusement, is it's actually going to help you make money. Because negative does not mean you expect to lose, but you may have a lot of fear in your trading, or you may not have fully accepted the risk. Reviewing your equity curve and keeping a trading journal will help you navigate times when you fall off the rails. Again, it's very easy for me to come to you and say, "Oh, look how well I did in one of my accounts last month. Bang! I made, 75 grand with a very low cost basis, meaning that I didn't need to have an enormous size account in order to achieve this P&L. And not only that, it was done through trading options. And not only that, it was done mainly in the morning, like we teach in the Newsbeat Bandit course. Ha! No, absolutely not. Absolutely not. It's about the equity curve. And I will pull a screenshot and when I log in, maybe on another day, and I'll show you my equity curve. But traders who do not show you this equity curve will never really truly understand what consistency is. If you are not seeing a trader's equity curve, you do not know if they're a good trader or not. You'll just know the end result of the tunnel. They crawled through a tunnel. You don't know if they got, analogically speaking, their arm chopped off, they lost a leg, and they came out of the tunnel bleeding on the other side with a bag full of money. I've had streaks. I've had streaks of over 50 winning trades in a row. And when you're in the zone, it is best. It really is the best feeling in the world as a trader. It's like you and the market are almost 100% connected and the money just falls into your account. And you can only get to this mental place if you approach this market with a can-do attitude. And it doesn't mean you have to approach the market with the I am right attitude, but you have to fully accept that you will get whatever the market is willing to provide. And since the market is always changing and evolving, you might not always be able to predict when or how random the market changes and what it will provide. But that is the whole point of watching the market on an intraday basis, so you can see the opportunities coming from a mile away before they actually hit you in the face. Winning at trading has very little to do with your trading system, trading equipment, or anything else. It comes down to can you fully accept the responsibility for your trading results? Do you accept the fact that the market gives you what you are willing to receive? Do you believe in the concept of probabilities and that you do not have to be right on every single trade? The quest for finding the trading zone and staying in it actually never ends. It actually never ends. You're actually going to also constantly be learning. Your education in the market, what you learn from the market, what you need to tweak in the market, it's actually a never-ending process. So remember, laugh, tell a joke, have fun along the way. And before we polish off here today on this Newsbeat show, I want to thank you from the bottom of my heart, really, for it's people like you that really make the Newsbeat live room what it is today. It's listeners that like you in which that I can dedicate the majority of my life. I've been trading over half my life and, doing these videos and sharing with you these things as you just constantly look for the quest for success is really what drives me. And somebody's bringing up, yeah, I didn't, what didn't I do? Okay. All right. Somebody is bringing up that I didn't share the over the earnings things. Okay. Um, very simple. You took $100,000 bet and all these names, long or short, you would be up $59,784 as of today. The last two trades we did, Fortinet and AbbVie long, both worked. Here's BHC. It's the old Valiant Pharmaceuticals are reporting Monday morning. Um, this is, I think I gave you that from last week, so this was added to my list. There's one more name that I wanted to add to the list here. I believe it was Amron. Yeah, it's Amron. So I'm going to just add one more name to the list. I'm not going to analyze it. I'm not going to even analyze it for you guys and go into why I like it. We sort of, got, why is this can I type anything? What's going on? Oh, there we go. Amron. It will be a long. And Amron is reporting, I believe, either tomorrow after the bell or before the open. So BHC we gave you from last Thursday, and I'm officially adding Amron long to my list. That's AMRN. But nonetheless, I hope you guys enjoyed this episode. Slap the like button if you did. Again, I have never received a paycheck from YouTube or Facebook, but it lets me know which one of my messages are really resonating with people. So again, thumbs it up if you liked it, and thank you very much for watching. Happy trading, make money. I'm going to do a group coaching session now in the Newsbeat Live room for all Newsbeat Live members. Have a wonderful weekend and have a wonderful trading week ahead. Have a wonderful evening.